And speaking of money, let's talk about Wall Street now. Jeff Stern joins us. And Jeff, this is that week between Christmas and New Year's, so relatively quiet on Wall Street as well?
Ray, that is correct. Volume has been extra low, more so than even in the past year. So far, the Dow is up about 0.25% for the week. NASDAQ's negative about 1%, while S&P is positive, but just barely. We know oil went up to over $60 a barrel, so that was positive. And the 10-year Treasury is still 2.43% or so staying right around there. Let's see how we're currently trading. The futures were up when I woke up, and unfortunately we're down right now. 24,804, down 32 points, 0.13% in the negative. NASDAQ 6,932, down 17.5 points. That's 0.25%. S&P 2,684, down 3 points, 0.12 in the negative.
Now, I read consumer confidence has been up more than it's been in 17 years. 2017 overall has been pretty steady. How does 2018 look, Jeff?
Ray, that is correct. 2017 has been strong. Let's recap. The Dow's up about 26%, NASDAQ 29%, and the S&P is 20%. As you mentioned, the numbers have looked good. Consumer confidence is positive, better than it has been in 17 years. We're at record 86 months in a row for adding jobs. That's the longest run since 1939. Wage growth, as we know, has not been as strong, but we'll try to keep that going. 18 states are going to raise their minimum wage in 2018. The tax bill should help a lot of that. You know, there was some good news, bad news, ugly. It was all over the place, but the markets were relatively calm and only went up this year. That was pretty positive. Actually, Argentina was the strongest market. 2018, we think, should continue. Apple's got some negative news coming out, so we'll see how that affects Apple. But overall, we think we're still going to add jobs, maybe not as aggressively as we have, but they should be rising. Interest rates should be on the rise as well. We're going to really pay attention, see how the Treasury moves, because as we know this year, the Treasury rate didn't move as much as we would have thought on rising rates, but we'll see how the new Fed does. And overall, we think we will be positive for 2018. Not as strong as we were for this year. We can't go back and try to replicate what we did in 2017, but again, stay invested, be invested, and have a long-term strategy. That's what we believe, Ray. Don't try to make up if you missed out in 2017. We don't see these years too often.
No, good year, that's right. All right, Jeff, have a good weekend and a good new year.
And you as well, Ray.
All right, thank you.